You own a home and you want your next one. So which comes first, buy or sell? It's like the chicken and the egg, right? It feels like a trap. It kind of is. Sell first and you have money and nowhere to live. Buy first and you could be carrying 2 mortgages, right, with a clock running. So today I'm going to walk you through how this actually gets sequenced. It's more solvable than it feels, and it happens much more often than you think. I'm Joseph Ranola with the Bridge and Boro Team at Real Broker. I sell homes across Staten Island and Brooklyn, and this is a very common question that I get from people who already own a home, right? So you're running 2 transactions at once and you have to line up on a calendar, right? Everything has to jive and work together, otherwise big issues could arise. So I did put a full buy and sell timing guide together on my website. Of course, like every other video, the link is going to be down below in the pinned comment and the description. Now, here's the question that decides everything. It's not which one is better, it's do I need the money from my sale in order to buy? If the answer is yes, and for most owners it is, you are selling first. Everything else in your plan exists to protect you while that happens. If the answer is no, if you can qualify carrying both and your down payment is sitting somewhere else, buying first is on the table. You have a lot more freedom than many other people in this situation, of course. So let's take selling first because that's where most people land, right? You know your exact number, you're shopping with actual money instead of hope. It also makes your offer stronger. A buyer who has already closed beats a buyer who still has a house to sell, right? Every time. The only real risk is the gap, right? You handed over the keys and you haven't found the next place yet. This is where the tool that almost no one has heard of comes in, and it's the post-closing possession. So this has to be agreed upon by everybody. It's not something that, yeah, we'll just do that. We have to make sure everyone's okay with it. But essentially, you sell the house, you close, you collect your money, and then you negotiate to stay in the home for a while afterwards. So you're essentially renting your own house back from the person who just bought it. And this isn't exotic, right? It's not something that never happens. This is quite frequently, right? It gets negotiated into New York contracts regularly. Usually it'll be something like 30 to 60 days, of course, could be negotiable. Maybe you need only 15 days, maybe you need 6 months. Everyone has to be on board. Either way, you pay the new owner a daily rate based roughly on what the house costs them to carry, and their attorney is gonna hold some of your proceeds in escrow until you are out. But think about what that buys you, right? Your sale is closed, it's done, you can breathe, your money is in the bank, and you still have a roof over your head while you shop. A very familiar roof because you've lived in that house. Now, the other direction, buying first. If you go that way, you need to get at your equity before you sell, and there's 2 tools worth knowing about. First is a home equity line of credit on your current home, a HELOC. It's generally the cheaper option, and you only pay interest on what you actually draw. It's almost like a credit card that you can just pull from, use it, put it back, whatever. But the detail that costs people the most is that open the HELOC before you list, not after, because once your home is on the market, lenders can get more difficult. Some won't close a new line at all, and some will freeze a line that you already have. This is uncommon, but it is a possibility. It may happen. So the sequence is open the line, prep the house, and then list it. Give it time. It's not instant, right? Now the second tool, and this has been coming up a lot more recently lately, I didn't hear about it for a few years, but a bridge loan. So that's a short-term financing. It's secured by your current home that bridges you to the sale, right? It's faster, it's more expensive because there's points and fees on the front end, not just interest. But it does something that a HELOC cannot do. A bridge lender underwrites knowing your house is going on the market, so it works when you are already listed. The HELOC is what you use when you plan ahead, and the bridge loan is built for exactly the situation when it's like, I don't know, we got to do something. What can we do? You speak to someone, bridge loan? Okay, bridge loan, let's do it. Now, there's the middle path, of course, right? Those are both kind of on the opposite ends of the spectrum. In the middle, you have the sale contingency, right? And that's an offer that says you will buy the new home only if your current one sells. On paper, you are protected completely, but we're not gonna soft pedal this. In a competitive situation, this is a much weaker offer, right? An offer with a contingency, a home sale contingency on it, it's a lot weaker. So if a seller has multiple offers, yours is the one with a condition attached to a house that they can't control. And a clean offer is usually gonna win, right? So where a contingency does work is a home that has been sitting for a while, in a estate sale or a listing where you are the only offer. Maybe they overpriced it and you can jump in and win with this type of offer. If we do use one, we tighten it, right? We're gonna put a deadline on it. We're gonna put a kick-out clause so the seller can keep marketing while you decide. I mean, you're giving up control and whatnot on your own end, but you're making it more palatable for the seller to accept it. Now, strongest version of all of this is timing both closings for the same day or back to back, right? So you close the sale in the morning, your attorney wires the proceeds, and then you close the purchase, an hour later or in the afternoon or whatever. And this is where New York genuinely helps you, because we are an attorney-driven closing state. Both sides have a lawyer coordinating, and your attorney can hold the second closing until the first one funds. I've done this many times. We just did one last week. It's another thing. It's nothing crazy and exotic. It happens, daily, really, in the city. What makes it work is both lenders knowing the sequence from day one, and a contract that says the purchase closes with or right after your sale. I also like building in a cushion instead of true same day, because a wire that misses that Friday cutoff means you're sleeping somewhere else all weekend, or any other crazy issues that could arise. In real estate, they do arise. So here's the prep work that I put every move-up client through, right? First, we're gonna get fully underwritten, not pre-qualified, not pre-approved, but underwritten, right? Pre-qualified means somebody listened to you talk and, yeah, I have this, I have that. Okay, good, you could go buy a house. Underwritten means that a human actually reviewed your returns, your pay stubs, and your credit. This is like, you're good to go, right? And we're gonna ask this specific question. Do I qualify carrying both houses at once, if God forbid, right? That one answer will set the entire strategy, not the Zillow number minus your mortgage or anything like that. We're going to start with what your home actually sells for based on recent closed comparable sales, right? We're not going to go with crazy numbers outside the box. It should be $1 million. We're listing it for 1.3. We're going to subtract your real payoff from your servicer, and then we're going to subtract what it cost you to sell. That gap between the Zillow math and the real number is where move-up buyers get hurt. Third, we're going to build the fallback before you need it, right? If the timing slips, where do you go? Family, a furnished short-term rental, a month-to-month somewhere, a hotel, I don't know. So we're gonna start pricing some ideas out now, okay? Knowing that number is what lets you negotiate calmly instead of taking a bad deal because you're, knee-jerk scared of being homeless, which of course, right? The people who do this smoothly are not lucky. We just built in the sequence before you fell in love with a house, and then it kind of just all falls into play. The full buy and sell timing guide is at ranolarealestate.com, my website. Again, it's gonna be linked down below in the description and the pinned comment. And if you want me to map out your specific sequence, your equity, your timeline, which of these tools actually fits, of course, call or text me anytime, 917-905-2541. Let's get you into the next house without accidentally owning two of them or leaving you on the street with none of them. I'm Joseph with the Bridge and Boro Team. Subscribe for more honest talk about New York City real estate.